Inflation is out of control, but I'm about to show you the average rent by state and the monthly dividend stocks to pay. Just a minute, you're telling me the average rent for a 3-bedroom in New York is $1,600 a month? On what planet? Okay, I'll reveal the best dividend stocks that put cash in your pocket every month to pay the rent. But first, a quick note on these average rents we'll be using. This is from the fair market rents published by the U.S. Department of Housing and Urban Development each year, and the rents given seem unbelievably low until you understand that this is the standard the government uses to determine housing payment vouchers for Section 8. Lower average rents means lower benefits the government has to pay. So yeah, sounds about right. So let's not get caught up in the fact that the only 3-bedroom you're renting in New York for $1,600 is one with a chalk outline on the floor. I'm just gonna go with it and show you how to create monthly dividend cash flow to pay the rent however much it is. I'll reveal those 7 dividend stocks, how much to invest to pay your rent, and towards the end of the video, how to turn shares of Tesla into a monthly dividend stock, so make sure you check that out. Before we get started though, I've got to send that special shout out to all you out there in the Bowtie Nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. We'll be matching our monthly dividend stocks with a group of states best for their yield, starting off with those living in this first group, including Missouri, Kentucky, and West Virginia, with an average 3-bedroom rent of $908 a month. And as much as I'd like to, I'm gonna resist making a joke about the backwood bumpkins that would want to live in West Virginia. Well, because I live in Florida, where you can either swim with the gators, wrestle them, or eat them, but whatever you do, it's gonna include gators, so I don't have much room to talk. Anyway, to pay for your 3-bedroom shack with mama and your 10 cousin wives, I'm sorry, I couldn't resist. To pay your rent every month, you could use Main Street Capital, ticker MAIN, with its 7% dividend yield. Main Street may have the lowest dividend yield on the list, but it's grown that dividend at 3.5% a year with no dividend cuts, and has produced a 9.5% annual return over the last 5 years. That made it our top pick for monthly dividend stocks in a recent video, and it's one you can count on. As a business development corporation, Main specializes in loans and equity investments into mid-sized businesses. The company had 182 portfolio investments as of the first quarter, with the largest representing just 3% of its total fair value. So a hit to any of these investments isn't going to hurt the shares that much. And one thing you always want to watch for in these BDC stocks, those business development corporations, is to compare the average yield on the company's investments with its dividend yield. In this case, Main Street earns a weighted average yield of 12.6% on its loan investments and then pays out 7% in monthly dividends. The average yield above that committed dividend yield is a must for dividend sustainability. Now, if the economy does fall apart, that average effective yield may come down with increased defaults, but it's so far above that dividend yield right now that I think you can continue to count on Main Street for that dividend and likely price upside as well. Later in the video, I'll show you how much to invest in each of these stocks to generate that cash flow that's going to pay your rent, along with 3 ideas to grow your portfolio fast. Our next group, those of you living in Oklahoma to Tennessee here, and these numbers actually seem pretty accurate to me. I remember paying around $850 a month for my first 2-bedroom apartment in Iowa. Now that was back in 2002, so as long as prices haven't gone up in the last 20 years, then yeah, this is pretty accurate. But real estate is one of the best ways to beat that inflation, and here I like Gladstone Commercial, ticker GOOD, with its 9.6% dividend yield. Gladstone is a real estate investment trust, a REIT, with over 17 million square feet of industrial and office space for $1.2 billion in assets. Now that's spread across 135 properties in 19 industries and 27 states. Of course, real estate has been slammed this year on that jump in interest rates. Here we see NAREIT data. We see that REITs fell 25% last year and are down almost 6% this year. The company's core property types, industrial and office space, have been hit hard, with office space down 37% last year and another 17% this year. But that proverbial blood in the streets for real estate may turn into your best returns over the next few years as those interest rates start coming back down and prices head higher. Gladstone made a surprise dividend cut last year that's going to protect cash flow and its current payout, and the price is right for this stock. We'll get back to that list of monthly dividend stocks, but I found another way to benefit from the insane cost of renting, being on the other side of the table and collecting that rent. Now, I've owned rentals, and if you haven't known the joy of being woken up at 3 a.m. to light the pilot light on somebody's water heater, then you haven't known the bliss that is managing your own rental properties. For that reason, I get the same rental cash flow without all the headaches with the Arrived platform. The site lets you invest in individual rental properties, with each investment set up as a separate LLC, so you have a direct investment in that property. You'll find all the investment information you need on each property, earning dividends on the rental income with cash flow from 3 to 8% on rents, and then price appreciation when the property is sold. Upside price returns have been as high as 136%, and usually over 5 to 7 years. Now, I know you have a lot of questions. I know I did before I started investing, so I'm going to link to Arrive in the description below, or just scan the QR code on the screen now. One thing, the homes available for investment sell out fast, so make sure you click through and get on that notification list. I missed out on a lot of good properties for not being on that notice list, so look for the link below. Back to our list, and I wanted to make a joke about the Mariana Islands here. Hell, there's only 49,000 people there, and I doubt many of them watch my videos, so I figured I could piss off as many as I want. But I just couldn't pass up the chance to point out that if you want to live in Detroit, you can get a 3-bedroom for just under $1,200 a month. Renting is cheaper than buying if you're using the JP Morgan Premium Income ETF, ticker JEPI, with its 9.9% dividend yield. The JEPI is easily my favorite among the covered call strategy ETFs. The portfolio managers have over 60 years experience in equities, and it shows in the fund's performance. Here's seen easily beating those other income ETFs, like the QYLD, the NUSI, and the RYLD. The JEPI has produced a 3% price return plus that dividend, while the others have seen their prices fall by as much as 15% or more. And I'm adding a monthly dividend ETF here along with these stocks because instead of investing in just one stock from the list, a portfolio of 3 or 5 is always going to be your best investment. Adding an ETF means you get instant diversification across stocks, so you don't have to worry about a drop in any one stock destroying your monthly cash flow. The fund invests in defensive, large-cap stocks like insurers, consumer staples, and pharmaceuticals. You see here, it's got all the bellwether stocks like AbbVie, Coca-Cola, and United Health. Now, because it makes those payments through that covered call strategy, it's not going to be as consistent as regular dividend stocks. You can see here in the history of dividends paid, it's a regular monthly payment, but no consistency in that amount, with payments ranging from 36 cents to over 60 cents a share. It just depends on how much premium the managers could get from those call options that month. For our next group of states, including North Carolina, Texas, and Pennsylvania, and an average rent of $1,271 a month, I rented a 3-bedroom in Beaufort, South Carolina while in the Marine Corps. Of course, on my $800 corporal's pay, I wasn't paying $1,200 a month, but loved that town. With a 13% dividend yield, you're paying for that old Southern charm with Prospect Capital, ticker PSEC. A Prospect is another business development corporation, that BDC founded in 2004 with over 16 years of dividends and performance. The company manages a $5.7 billion portfolio of 122 investments in companies across 37 industries and earns a 9.9% yield on its portfolio. Now, that is below the dividend yield, but the company has enough cash to cover the dividend, and rates are gradually rising after the big increases last year. In fact, Prospect has returned a cumulative $20 per share in dividends for more than $3.8 billion since that 2004 IPO, and the payouts keep climbing. That is the purpose of these BDCs, to act as a bank or investor to mid-sized companies, manage those assets, and then return 90% of earnings as cash flow to you, the investor. At an average rent of $1,500 a month, we're into the group that includes New York and my adopted home in Florida. And if you don't believe you can find a 3-bedroom in New York for $1,600, check out this 5-bedroom in Brooklyn, situated conveniently between a food distribution center on one corner and a candy store tobacco shop on the other. Paying for that high class means you have to go high dividend with the 17% dividend you get from the Simplified Volatility Premium ETF, ticker SVOL. Now, this fund's strategy is different from the stocks and stock funds we usually talk about. Volatility is just how much the market or a stock moves up or down in a given period, a gauge of that stock market craziness. The volatility index, or the VIX, is the market's expectation for volatility over the next month, so how crazy investors believe stock prices will be. And while you can't invest directly in that volatility index, you can invest indirectly through futures, options, and ETFs, betting whether that actual volatility is going to be higher or lower than expected. But then the SVOL really isn't making a directional bet here. It's simply saying that market expectations for volatility are typically higher than the actuality. Shorting those expectations then, so selling futures contracts against the VIX, is a way to capture that fear premium in the market. This strategy is backed up by research testing VIX futures shorting from 2005 through 2015. Rolling those short contracts over each month was profitable in 8 of the 11 years, with an average monthly return of 0.7%, and a total return over the period of 118%. But the biggest selling point for me, though, is that this is a totally different asset class. The VIX has a historically negative correlation with stocks. When stocks go up, the VIX usually goes down, and vice versa. That correlation here is negative 0.84, which is very strong and means using that volatility strategy along with your stock portfolio can be a great way to reduce the risk along with that higher dividend yield. And we've still got two more groups to highlight, including how to make shares of Tesla pay for your California dreaming. But how much do you need to invest to pay your bills? How do you get to that point of financial freedom where your dividends cover your rent? Finding out how much you need to invest in a dividend stock for a certain amount of cash flow is the easy part. First, you just take how much you want to make each month in dividends. Say you want to cover that $2,000 rent on a studio apartment above a bowling alley in Manhattan. Then you take that amount times 12. Since dividend yields on stocks are shown on an annual basis, this makes it easier to calculate by finding out how much you need for the year. So then you take that number, so $24,000 a year for our example, and divide it by the annual dividend yield on your stock portfolio or your stock. For example, if you divide that $24,000 by the 13% dividend yield on Prospect Capital, it shows you need just over $184,000 invested to pay your rent. Okay, I know a lot of you are saying, just a minute here, you're telling me I need to save almost $200,000 to earn $24,000 a year in dividends? Well, yeah, you can't expect to just save a couple of thousand and for the market to rain down easy money. Nation, I'm not here to blow smoke up your ass and promise you rainbows and unicorns. What I can do is give you 3 tips to help you grow your portfolio faster so you get to that point where you're living off your dividends as fast as possible. And first is don't invest in dividend stocks. Okay, probably not what you were expecting in a dividend investing video, but if you're trying to build to that point, build that wealth fast, then dividend stocks are not the best way to do it. First of all, companies that pay dividends don't generally grow very fast. There's a reason they're returning cash flow to investors instead of reinvesting that growth. Coca-Cola is a great company, but that annual return on the shares isn't getting you anywhere fast. Investing $1,000 a month, it's going to take you 26 years to build $1 million portfolio. Compare that with how long it takes investing just $500 a month gets you there in some of these growth stocks and funds. 10 years in Nvidia and just 8 years in Tesla. Beyond that, you lose money to taxes every year on those dividends. Over that 26 years in shares of Coca-Cola, you'd lose almost $50,000 to Uncle Sam. Now, you know I still invest in dividends, but it's because I love that motivation you get from seeing those cash payments hit your account. It may not be the fastest growth strategy, but it keeps me motivated to keep investing. Second tip here, don't diversify, but do your homework. Do you ever wonder how Warren Buffett has been able to beat the market for so many years? It isn't because he's diversified with lots of stocks across the market getting that average market return. It's because he's found a handful of stocks he thinks is going to do really well and is focused on those. In fact, Buffett has nearly half of his portfolio in a single investment in shares of Apple. At one point this year, just 7 stocks accounted for nearly all the S&P 500 total returns. 7 stocks with an average 92% return, while the rest of the market was up less than 0.1%. So your job as an investor, and what I try to help you with here on the channel, is to understand the analysis that you need to do to find those stocks. Next, before we get back to our list, the third tip here is just find extra money to invest. I know that is the worst tip in the world, but sometimes, folks, you just can't save more money, and you can't expect to find that next hot stock. What you can do is find a side hustle that you can do, even if it's just for 10 hours a week for a few months to invest more. Investing $500 a month in a growth fund like the semiconductor ETF can build to a $750,000 portfolio in 16 years at the historical return. Add another $500 a month, though, and you shave off more than 3 years. This next group comes in at an average rent of $1,700 a month, and somehow I can't believe that a 3-bedroom in Alaska is more than one in New York. Okay, maybe if all your houses didn't melt each summer, you'd have more to live in and prices would be lower. Now, before I get hate mail about being insensitive to Alaskan culture, I want to point out that this picture was made by Pringles. So send your nasty letters to Pringles, P.O. Box freaking relax. And I don't know which is worse, the fact that I zoomed in to see what he's watching on TV or that it appears to be Walruses Gone Wild. But paying for that expensive ice palace is going to mean the highest dividend yield on the list at 17.3% and AG&C investment, ticker AG&C. Now, AG&C is my favorite mortgage REIT, or M-REIT, and while over the last year hasn't been pretty for this stock, it has continued to pay out that cash with no dividend cuts. Now, a mortgage REIT, or M-REIT, is a special type of real estate company. These REITs borrow money on short-term rates, then leverage that up, borrowing 2 or 3 times as much to invest in long-term mortgages. You can see here the interest rate on the repurchase agreements, a special overnight short-term rate many mortgage REITs use. And you can see it's been almost nothing for much of the last decade. So they use that borrowed money and the other capital to invest in mortgages with higher interest rates. So if you take maybe 7 or 8% interest received on a 30-year mortgage, minus that near zero rates they're paying on that borrowed money, it's been a very profitable business and great dividend cash flow. AG&C holds a $61 billion portfolio of these mortgages, 91% of that in 30-year fixed terms, and most of those in safe agency-backed mortgages. Now, higher interest rates over the last year have hit the value of those older mortgages the company holds, but the average yield on the portfolio will gradually increase from here. The stock is trading for a significant discount to its book value, and it's a clear industry leader. Now, I'm going to show you how to turn Tesla or any growth stock into a monthly dividend payer next, and I've shared some of my favorite monthly paying stocks in this video, but if you want to see every monthly dividend stock ranked, make sure you watch this video next. I'll rank the top monthly dividend stocks by yield and return to show you which ones to buy. If you're going to be living in California with an average rent well over $2,000, you're going to need an investing strategy that not only pays you dividends, but also grows the portfolio over time. And most of the dividend stocks we've highlighted so far pay out that strong cash flows, but that's about it. You're not going to get much in the way of price return. That's why I wanted to share a strategy you can use to turn any growth stock into a cash flow machine to pay your rent, but also to grow your wealth. We're going to use Tesla as an example, but you can do this with any stock. If we go to the options available on Tesla, you're going to see there are lots of dates available for these call options, but we want to use the monthly options for that monthly cash flow. If I own 200 shares of Tesla, I can sell $230 strike call options, and we see the last price here was $10.10 a share. I want to help you understand what we're doing here, because doing this, we could collect over $2,000 a month on an investment of just $44,000, allowing you to make your rent payment on a fraction of what it costs in these other dividend stocks. By selling a call option on a stock we own, we sell to another investor the right to buy those shares from us at a certain price over that time. Here we're telling another investor they can buy those 200 shares of Tesla from us for $230 each over the next month. For that right, that investor is going to pay us that $10.10 a share, or about $2,020 now. And this can be cash flow you get every month, but you also need to understand the possible outcomes. If shares of Tesla rise above that $230 each over the next month, then that option buyer is going to buy them from us at that price. And in this case, we keep the $2,000 premium and sell the shares for $46,000. We keep the cash collected and get a return on our initial investment. In that case, we would just go back into the market, buy another 200 shares of Tesla, and sell another call option to collect more cash for the next month. There is another outcome though, and why you only want to use this strategy on stocks that you want to own for the long term. If shares of Tesla stay below that $230 price, or if they fall, then you're going to keep that stock and the $2,000 you collected. Here you can sell more call options for the next month and collect more cash. Now, the only real risk here is that the stock falls by a lot and you aren't able to collect as much cash for that same strike price, but you still get to keep the stock for that long-term investment. Earn monthly income from rental properties with Arrived Homes. Find out more with the link in the description below, or click on the video to the right to see the top monthly dividend stocks ranked by yield and returns. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.